Hello and welcome to the news here on Magic Bricks Now, India's first property business channel. I'm Krishna Kumar. Let's take a look at the top stories that we're tracking. Mega deal in the works. Singapore's GIC, Macquarie, JP Morgan and Standard Chartered are in the running for a deal with Tata Housing to build luxury homes. The deal could be closed by June. That's a Magic Bricks Now exclusive. Home loan demand is powering business at top banks and housing finance companies. That's the news coming in from earnings declared by India Bulls Housing Finance, DHFL and private sector biggie Axis Bank. With about a month to go to the budget, industry has started drawing up its wish list for the finance minister. Today, we get you the developer body's NAREDCO's budget expectation. Straight to our top story then. A mega deal is in the works and could be announced as early as June this year. Private equity firms are vying to sign a deal with Tata Housing to fund its upcoming premium and luxury residential projects. Disha Shah now joins us with some exclusive details on that mega deal that's in the works. Disha, take it away. Tell us more.
To build premium and luxury residential projects, Tata Housing is looking to partner with private equity players like the Macquarie Group, JP Morgan, Standard Chartered and Singapore-based GIC. At least these are the four names that are doing the rounds till now, and this is what sources close to the development had to say. However, when we got in touch with the Tata Housing company, they refused not to comment on this. Secondly, sources also tell us that the company may co-invest in these projects and their participation could be just 30% and rest 70% of the project's profit could go to the investors. Thirdly, the company is looking to construct homes in top 5 cities, namely Mumbai, Bengaluru, Kolkata, Chennai and Delhi, and all the homes will be priced between 3 crore to 10 crore rupees. And lastly, sources close to the development, they also tell us that the deal could be valued at $500 million and we could expect the deal to close by sometime June this year.
Disha Shah there with all the exclusive details of the big story right here on Magic Bricks Now. Moving on. The Maharashtra government could file a rejoinder to the Union Environment Ministry's observation that RA Colony in Mumbai be considered an eco-sensitive zone. The MMRDA had plans to build a metro car shed over here. Aishwarya Paliwal now joins us with more details on the story, and that is too a Magic Bricks Now exclusive. Aishwarya, tell us more.
The State Environment Department of the state government will now file a petition against the observation that the Ministry of Environment has made. They are saying that it will cost MMRCL extra crores if they shift the car shed from RA to Kanjurmarg, because Kanjurmarg does not fall in the way of the metro line. 7-kilometer extra stretch will have to be made if they shift it there. So they are saying that even though they have said that it's an eco-sensitive zone, money-wise it will not make any sense. Also, there were 7 companies that had bid for Metro 3 to make Metro 3 station. So MMRC is saying that they will hold the names of all those top contenders for a month and see where this goes, because they are saying companies are also becoming a little conscious now of wanting to bid for other metros. So they are saying they'll wait for a month for a revert from the Union Ministry, and once they get that, then only they'll give out the names of the top contenders who will be in the foray to make Metro 3.
All right, 1 month is the time that's available, and I'm sure we'll follow up on that story when that deadline passes through. Aishwarya Paliwal, thank you so much for joining us here on the phone line with that exclusive. Now, to those of you who track the stock market would know that the markets ended at a 20-month low today, with the Nifty falling below that crucial 7,300 mark for the first time since 2014. The Sensex lost 600 points in one day, and there is a reason why this is important to you and me, the home buyers. And we have our editor, Faye D'Souza, joining us to explain that and put it into perspective. Faye, not the best of days for, the stock markets across the world, especially Dalal Street. Asset classes across the board have been battered. How does real estate feature in the scheme of things?
Well, Krishna, you know that there is a lag effect normally from the stock market into real estate. A lot of investors in India tend to skim their profits off the stock market and use it to buy real estate, because the idea is when the stock market gives you returns, you want to turn those notional returns into actual physical assets, so people tend to buy real estate. What's going to happen now when we see weak markets, and we're likely to see an extended period of weak markets given what's happening in around the globe and what's happening with commodities and, like you said, crude and currency and all of these things. If we have an extended period of a weak market, we will see even more pressure on the real estate sector a sector that's already feeling a lot of heat, which means that cash flows into the real estate sector will come under pressure again. This would mean, of course, that developers would have their backs to the wall even more than they have had over the last 2 years. So, my advice is, while it might be, a tough time for fixed income investors and equity investors, if you're a home buyer, so you're looking for a home to buy and to live in with your family, there isn't a better time than now.
There isn't a better time than now for the home buyer, is the word coming in from Magic Bricks Now's editor, Faye D'Souza. Faye, thank you so much, as always, for joining us and putting that complex data into perspective for us, how the stock markets affect our decision to buy homes. Answer: doesn't affect. As a home buyer, go out there and get your home. And thank you so much for that. Moving on. Real estate is what has powered earnings of top banks and housing finance companies. Axis Bank, DHFL and India Bulls Housing Finance all reported a 20 to 30% growth in home loan disbursals. Let's take a closer look at their numbers. First up, Divan Housing Finance Corporation's profit, which rose 16.4% to 186 crore rupees. DHFL's housing loan sanctions also grew 32% to over 9,300 crore rupees on a year-on-year basis. My colleague Aishwarya Paliwal spoke with the management earlier and she sent us this report with all the details. Take a look.
Home finance company DHFL posted a strong set of numbers this quarter. Company's net profit rose by 16%. Their gross NPA stood at 0.84%. The interesting thing this quarter was that their loan disbursement stood at a whopping 30%. They saw a rise of 30% on a quarter-on-quarter basis. Even the sanctions that the company gave this year stood at a whopping 31%. That means they saw a rise of 31%. The management said that this rise in loan disbursement as well as sanctions is due to the emphasis that they give on Tier 2 cities. They attribute this rise to all the Tier 2 cities that they cater to. Let's listen in to what Kapil Wadhawan had to say about this.
I think it's the low middle income segment. That's where DHFL has a strong leadership position. Smaller Tier 2, Tier 3 locations. The mid-income segment, the low and the mid-income segment is our bastion for growth, and that's where our focus area is.
Like Mr. Wadhawan pointed out, Tier 2 cities would be where the company would be putting most of its emphasis. The average loan size that the company is giving right now is 15 lakh rupees. Now, this is not the kind of money that people would shell out for huge houses. They are also saying that they do not expect 2016 to be any different from 2015. He expects 2016 to be somewhat on the lines of 2015 for real estate industry as a whole.
Take a look at all those earnings. Here is why you need to keep a track of these earnings. I have Faye D'Souza still with me to put it into perspective. What do these earnings numbers, the fact that real estate has powered the earnings of these companies, what does it mean for the home buyer?
Well, Krishna, obviously, if we're looking at these numbers right now, and we've seen 20, 25, 30% growth for varied lenders, whether it's the banking sector or the NBFC or the housing lending sector, it means that this is the portion of their business, the mortgage home loan portion of their business is the portion that's giving them the most bang for their buck in terms of giving them growth. So all of these lenders are now going to push really hard for the mortgage business. So there'll be a lot more competition. They're going to be vying for your business as a home buyer and a borrower. And obviously, when there's that much competition in any particular space, it means that you benefit, which means that over the next couple of quarters, we'll see, of course, more offers come into the market. People will call you offering you lower interest rates and better deals. You should, be out shopping for a better deal for your home loan, whether you're buying or you're already a borrower. It might be a good time to keep an eye out, which is why it becomes relevant to us as home buyers.
Absolutely. All these numbers basically mean that the home buyer is in a coveted position, so to speak, with everybody vying for their interests. So go out there and crack that deal to get your dream home. Faye D'Souza, thank you so much for joining us here on the news with that perspective. And we will continue our track of the earnings. Let's talk about India Bulls Housing Finance Company. Now the company has seen its profit rise driven by home loan demand that grew 30% last quarter. My colleague Disha Shah gets us a report on the company's earnings.
India Bulls Housing Finance Company has witnessed a strong quarter, registering a profit and growth of 23.6% year-on-year. Secondly, the company's disbursal also remained stable this quarter, registering at over 6,000 crore rupees. thirdly, an important point to note here is that the company's loan book has seen a growth by good 30%, and the company says that this has come from the real estate market. The company's vice chairman and managing director, Mr. Gagan Banga, says that the demand for home loans has come from the affordable housing segment between the ticket size starting from 17 lakh and going up to 75 lakh rupees. He also said that they will continue to provide home loans on an average ticket size which is 24 to 25 lakh rupees. He also said that this quarter they have received registrations from 3 cities, namely Mumbai, Bengaluru and Hyderabad. Lastly, he believes that the pain for the real estate sector is not over, although the demand comes from the affordable housing segment, because he believes that the premium end of the market is still slow and will take some time to recover.
Right, it's not just the housing finance companies who have announced their results. Axis Bank, the private sector biggie, has also announced its results today. Listen to what the management had to say.
Underlying earning quality is strong, with operating profits growing at 20%, PAT up by 15%, and ROE of 18%. Growth momentum was strong with loan growth at 21%, led by retail, which increased its share in the loan mix to 40%, up from 38% last year.
Within retail, there is a lot of demand for still coming in and growth coming in home loans, in unsecured personal loans and the credit cards businesses. Those, while there are geographic pockets in which those are weak, on an overall national basis, the demand is still quite strong. Where we are not seeing a lot of growth is in new projects on the corporate side, and to some kind of more limited extent in the SME space. Those are areas in which we are seeing slower loan growth.
And we have Amita Balachandra with the overview of those Axis Bank results and how home loans powered the private sector biggie. Take a look.
Axis Bank's Q3 earnings results are out and its net profit is up by 15% year-on-year. It now stands at 2,175 crore rupees as against 1,915 crore rupees last quarter. Now, the bank's balance sheet has also grown by 18% as of December 31st, 2015. But what's interesting to note here is that its retail loan growth has increased by 27%, mostly driven by home loans. However, its corporate loan growth has sort of slowed down. It now stands at 21%. What's also a key takeaway, another key takeaway from these results are of course its net asset quality, which has taken a big hit. Right now it stands at 1.68% as against 1.38% last quarter. However, the bank attributes this to taking into account full impact of RBI's asset quality review that's being conducted. Now, the bank's average ticket size for mortgages is 28 lakh rupees, mostly driven by larger cities. Also, the bank says that over the next quarter, there is scope for more rate cuts. More rate cuts could come in also. However, the bank maintains that spreads will remain stable.
And if you need more proof on where to put your money, follow the big boys. Private equity pumped in $5 billion into real estate for the year 2015. Of the 90 investments PE firms made last year, 85 transactions brought in $5.06 billion, finds a study by Venture Intelligence. The study finds that many large developers formed several joint venture platforms amongst each other. Many firms also announced huge investments. Standard Chartered is set to invest 2,000 crore rupees in Tata Realty. This investment will be used to form a 3,000 crore rupees investment platform that will help them buy commercial assets. Next, Goldman Sachs committed over 1,800 crore rupees to a 74-26 joint venture with Nitesh Estates. Warburg Pincus entered into a JV with the Embassy Group for $175 million. The JV will build warehouses across the country. Piramal Realty was a hot favorite for investments, with both Goldman Sachs and Warburg Pincus investing 900 crore rupees and 1,800 crore rupees in the firm. The latest JV is that of Stanchart PE, IFC and ADB. These three firms will invest over 1,200 crore rupees for a 70% stake in Shapurji Pallonji's affordable housing venture. Clearly, real estate is the hottest bet for PE firms. Moving on. The budget session is inching closer and real estate developers have quite a few suggestions for the finance minister. At a press conference held in New Delhi, the National Real Estate Development Council spelled out their wish list from Budget 2016. Listen to what they had to say.
Please ensure that you give infrastructure status to the real estate sector. Need to give little handholding by practical study or by creating a separate handholding fund to ensure that the projects are completed and delivered across the country. Please try to make special provisions for single window clearances so that the clearance processes can be expedited for timely delivery of projects. It is time that government reconsiders giving income tax concessions and rebates to developers who are promoting smaller houses for LIG or lower middle group or EWS categories, and also who are into slum redevelopment projects.
जो ATIB जिसमें अफोर्डेबल हाउसिंग के लिए एटलीस्ट अलाउ करें, जो 2-3 साल का टाइम था पीछे, उसको फर्दर बढ़ाएं आगे के लिए भी.
Support us with an easier taxing system to the consumers who would like to invest in real estate and support Housing for All initiative of dear Prime Minister. Second is that in case you are able to make it, incentivize the poor sector housing so that we will have more focus on that area.
Number one, sir, please have a sliding scale for the registration charges. This is important for us because on an affordable housing segment, we would like you to have a lower registration charges, and maybe on the luxury side, the registration charges can remain same. B, sir, the service tax for the industry is really killing us. We have 33% taxation on the entire real estate sector, and the dream of affordable housing and housing for all can only get fulfilled with your support. So request you to kindly look at these two areas because they are directly under your control. You could help us to look at the taxes in terms of service tax as well as look at the registration charges. Anything which is 1,500 square feet and less should be looked into very, very considerably at your level.
Good news, some good news for the realty retail sector. The Maharashtra government has approved the retail draft policy in principle, and the details will be unveiled next month. The policy objectives include raising the floor-to-floor height limit by 10 meters and 50% additional floor space index over the base FSI to develop shopping centres. The government will also create retail entertainment zones and retail clusters by providing a slew of tax benefits. In more good news for the developers, the parking rules will be amended so that the parking space is not counted in the FSI. So how will these slew of objectives for the realty sector benefit the retail realty sector? To understand that, joining me on the phone line is Pankaj Ranjan of JLL. Pankaj, thank you so much for taking time to be with us here on the news on Magic Bricks. Now tell us, the new policy allows up to 50% additional FSI over the base FSI to develop retail and shopping centres. Will this encourage developers to build more malls?
Definitely, because we've seen that the retail real estate scenario, particularly in tier 1 cities like Mumbai and in other tier 1 cities, has been very, the last 2 years has been very steadily growing. The demand for retail space has already been there. So it's definitely an encouragement for more shopping mall from real estate developers to build more shopping malls, particularly. And we've seen the success story for retail alone is not possible if you do not do mixed-use development, because what happens is retail can only work up to a certain number of floors, which is typically about 4 floors. Beyond that, to consume the FSI, you have to use to an alternative asset class like a hotel or offices, essentially. So with the increase in FSI, mixed-use development obviously becomes a much more favorable position to do. Secondly, from a consumer standpoint as well, a mixed-use development works better because it gives the opportunity for work and play together.
All right, Pankaj, can we expect an increase in new malls or, say, redevelopment of current malls with this all these slew of objectives that they've been laid out?
I mean, it's definitely a very positive step, but actually it really has to be seen because the land availability, particularly in the large cities, in a city like Mumbai, if I have to look at it, and then looking at tier 2, particularly in Mumbai, the availability of land is very, very, very limited. So, although the policy might be very favorable, but the constraint is in terms of supply of real estate, in terms of land. In tier 2 cities, there is essentially an amount of demand, but again, it has to be seen seen that the demand from a consumer standpoint remains as 1 or 2 malls. It cannot be like 5 or 6 malls suddenly will come up because there is a change in policy. So I think it's very favorable from a tier 1 perspective from a city like Mumbai. But again, how much gets practically executed because of availability of real estate is a challenge in terms of quality land supply, where you actually would want to build a shopping mall, and shopping malls typically would need to be built in locations where there is a good amount of catchment already available. So it still has to be seen on the ground how much it will help per se as well. But definitely it is a very positive step.
Now, Pankaj, the reason why I've been asking all these questions, and one last final question I want to take the takeaway I want from you is that this comes at a time when the realty retail sector is struggling to stay afloat. Tell us, on the whole, what will be the impact of this draft policy on the sector? Will it, as a whole, benefit the sector?
Yes, it will definitely benefit. One, because from a consumer experience perspective, we can give better stores if you increase the heights. Secondly, if you allow parking norms which are made much more easier, definitely gives a much more flexibility to developers to build more parking space, which is definitely a very important success factor from a retail space from a project standpoint. And thirdly, from increase in FSI, it gives the leverage, because see, retail real estate we've seen typically only works very well on a leased model asset. So what happens is when you are only looking at leased asset, you need to build another asset class alongside where you can actually liquidate and generate returns during the construction phase of the project, which can be built by offices or residential per se. So if you're able to do that, the developer can actually, you subsidize the retail real estate and then it becomes much more profitable and engaging for the developer to build retail real estate. So definitely from a long-term standpoint, it's definitely a very big advantage.
Pankaj Ranjan of JLL, thank you so much for taking time out to be with us here and give us your perspectives on that draft retail real estate policy. Now, moving on, the interiors of a home are as important, if not more important, than the exteriors, and I'm sure that plenty of us love to dress up our space to the best of our abilities. And I'm sure plenty of us have old grills at home that mar the beauty of our pads. So if you'd like to learn how to make your old grills look more elegant, then here are some tips from interior designer Jannat from this week's episode of The Interior Show.
Jannat, tell me that when we usually talk about grills, right, it's usually a very mundane element of the house. How do you look at it?
See, I draw a lot of my inspiration from origami.
Okay.
So definitely, yes, every room, say it has a particular theme. Mm-hmm. The grill will be designed according to that theme. But when I say origami, I'm going to show you a couple of screens which I have with me, which I've done. So if you see this screen and if you see the way it shuts and it opens, there are a lot of vertices that you see. So it creates this kind of a 3D effect.
Okay.
You can also just draw the wireframe out and use that into grills, right? And it looks so pretty.
So these days, Jannat, in the new buildings that are coming up, I don't really see grills. So are they relevant in today's time or in the future?
See, grills are extremely relevant if they are a part of the building elevation and design. Anything to do with safety and security, you have to install a grill.
So how do you balance security and the aesthetic part of grills?
See, the security part of it remains intact because I need to see the distance between the sections that I'm creating, and definitely you can't actually pass through it. So that's very important. So every form that I design, that is the key element that kind of drives my proportions.
So tell me something about the design of the grill. Sometimes, the design is not too appealing and you can't really do much about it, especially in rented apartments. In that case, how do you deal with grills?
So if you already have grills installed, yes, I'd like to say that the easiest thing you can do is to give it a new look probably and make it look fresh. You paint it again. But yeah, if you're looking to give it a new form, you can just probably remove a certain portion, design that would be enough, and then weld it back into the grill. That's the beauty of it.
And is that very easy to do?
That's very easy to do.
So tell me, how have you experimented with grills?
So in some of my projects that you've seen, actually we've done like a bird cage incorporated into the grill. So you have this 2D and then you have a 3D actual circular bird cage, which is painted in a different color. So that was something very different.
You can catch the rest of that interview on the Interior Show here only on Magic Bricks now. And with that, we've running out of time over here. But if you have any feedback or suggestions for us, write to us on the email ID flashing on your screens. We're also on Twitter and Facebook, so feel free to tweet to us or post a query on our Facebook page. We would love to hear from you. Also remember to check out our live streaming website www.mbnow.in. And with that, it's a wrap on this edition of the news on Magic Bricks Now. Thank you so much for watching. This is Krishna Kumar signing off.